Hello, everyone. I'm Steve Wolf, president of the Beyond Earth Institute. Welcome back to this third workshop on financing for large-scale space infrastructure and habitat projects. It has been a very interesting set of meetings that we've had over the last few weeks. I really appreciate those of you who have kind of stuck with us and come back week after week as we kind of work through these proposals. It's been very exciting. You know, again, as I open this up, I just want to emphasize once again that as we look at these, as we look at expanding the human communities beyond Earth, the level of complexity and demand on resources is just exponentially greater than anything that we are doing now and plan to do in the near future, and it's going to require a level of creative thinking that I'm not entirely sure that we've fully applied to the space realm up until now. And I think some of these, certainly some of these models, or all of these models, certainly represent that kind of creative thinking. How do we approach these large-scale challenges? And hopefully through this process, and again, this is not the end of this process. This is the last of the workshops that we have scheduled. But Beyond Earth sees this financing of communities beyond Earth as one of our pillars of our ongoing activities. So, so with that, let me get this session underway. I want to, let me share a few slides. I'm going to click through these so that we, once again, can center ourselves. So here we are. So we're in workshop 3. We are going to be evaluating the bank of space. Very interesting model. And we'll get more into that in a minute. Our agenda today is certainly welcoming. I wanted to give you a project overview again. I want to introduce the evaluators for today. And then, of course, we'll have a presentation by the architect or author of the Bank of Space proposal, Jason Aspiotis, chairman of Finsophy PBC. And then after that, the evaluators will respond, ask questions, and provide feedback. The overall, this research project is about identifying the financing mechanisms that would be available for these kinds of large-scale activities in space. We want to review the specific proposals that are out there, and these proposals we want them to be well considered. We're conducting workshops as we are doing today. The evaluators will review these both qualitatively in response to the presentation today, which we are capturing, as well as providing responding to a quantitative questionnaire, and that all of that will be combined into a report towards the end of summer, early fall. So we kicked this off on June 10th with a fantastic panel of experts. This has been our schedule. We are at the last workshop today. And we've had a couple, I would just say that we have the first 2 webinars, first two workshops were excellent, where we covered the Lunar Development Cooperative and then the Space Corporation Act. And we're wrapping this up today with another excellent session. Our evaluators, these are a list of our evaluators. Evaluators with us today are Sidney Nakahoda, Gary Calnan, Tony DeTora, Courtney Stadd, and Hoyt Davidson. Unfortunately, Jeff Matthews and Meagan Crawford couldn't be with us. I'll allow them to introduce themselves in a moment. They're going to be looking at evaluating this model on these criterias on comprehensiveness, completeness, chances of success, financial soundness, diversity, and to what extent their model enables communities beyond Earth. And that is it. I will stop sharing now. And what I'd like to do is allow the evaluators to introduce themselves. I see Gary, so why don't I let you, Gary, briefly introduce yourself?
Sure. Hey, everyone. I'm Gary Calnan. My background is in economics and business and entrepreneurship. I hold a CFA charter. I'm a graduate of the ISU Space Studies program and co-founder and CEO of Cislunar Industries, where we are creating a metal processing technologies to provide metal materials for everything from propellants to in-space manufacturing, both in space and on the surface of celestial bodies. I believe that we are now seeing the beginning of the next industrial revolution in space, and innovative financing structures like the Bank of Space that we're talking about today, could help to de-risk and accelerate the process and ensure that we reach the vision that we're all shooting for. So thanks for having me, Steve. Appreciate it.
All right. Thanks, Gary. Hoyt, why don't you go next?
Yeah, hi, I'm Hoyt Davidson. I started my life as a physics major and a satellite systems engineer at Lockheed, but then went to the dark side. I've been an investment banker for over 30 years now. The last 25 or so of which I focus on the commercial space and satellite industry, which is why I'm interested in this topic.
Excellent. Let's see, Tony.
Hi, I'm Tony DeTora. I currently serve as the Vice President of Policy Coherence here at the Beyond Earth Institute. Another hat is the Vice President of Government Affairs at Link, which is a small satellite company that is putting cell phone towers on our small satellites to fill in all the dark spaces so your phone will work everywhere. Very interested in this and have been for a long time. I spent 10 years working on the Hill on science, space, technology, policy, and the peripheral areas. Any place there was a shiny object, I kind of got involved. So, and my background beyond that is with nonprofit management, and I have an aerospace engineering and master's in business administration from Embry-Riddle down in Daytona Beach.
Excellent. Thanks. Mr. and Courtney Stadd.
And in the commercial space domain for about 40 years, both government, White House, a couple of stints at NASA, helped put together the commercial space office at Commerce, and ran what is now the regulatory office for rockets at the FAA. Was also, Gary, way back when, don't tell me how old you were, but back in the 80s, I helped co-found the business part of ISU way back when. Spent a good part of my life with various Pathfinder industry, GPS, satellite imagery, launch business, and now on the eve of helping a team pull together a very large scaled financing, not a SPAC, I might add, the old-fashioned way, with optical satellite company that should be announced in a few months. And a real honor to be part of this group of people. Thank you, Steve.
Thank you, Courtney. And Sidney?
Hi, I'm Sidney Nakahoda, founder and general partner of Seldor Capital. We are a fund here in New York City that invests in pre-seed and seed stage companies here in the US. And I'm also a faculty member of Columbia University, where I teach courses on international development. In a previous pre-space life, I used to be to work at the World Bank. So I see a lot of ideas or motivations in Jason's initiative, similar to what I saw when I was at the organization.
Thanks. And as you all can see, we've really assembled quite an impressive group of folks to help us evaluate these models. So with that, thank you all again, and with that, I'll go ahead and introduce Jason Aspiotis. So Jason is he's the chairman of Finsophy, PBC, and it was with that organization, I believe, that he created the Bank of Space concept that he's going to discuss today. He's also the business development manager at Axiom Space. Prior to that, he was prior to Finsophy, he was the senior associate at Booz Allen Hamilton. He has also been the chief engineer and senior systems engineer at Raytheon. So he has both financial and technical, competency. He holds a master's in engineering and industrial management, as well as a master's in physics. And certainly, Jason, if you want to add anything to your bio, by all means, please do so. And what I will do now is, Jason, I'm going to make you a co-host. And so when you see this link, you should be able to share your slides. Jason?
I'm not seeing a link, but let me try sharing.
Just try sharing, yeah. See if you have your share thing should be green. There you go.
All right. I assume you see what I see.
Yes. Looks
right.
good.
Let me go full screen, then we'll hit the road running. All right, well, thanks, Steve and everyone. It's a great honor and pleasure to be here to talk about Banker Space. They want to say that I'm representing Finsophy PBC here, not Axiom Space. This is by no means endorsement or a discussion from Axiom Space. It's just Finsophy PBC and my own opinions. So Banker Space was invented as a concept really back in 2013, actually, in my mind, because I was one of those guys working in the space industry and really excited about what's happening with Jeff Bezos, Elon Musk, Sir Richard Branson, and I saw that these very, very wealthy individuals were putting their money where their mouth is, investing heavily in their aspiration to see humanity expand beyond our planet into the solar system and beyond. So that inspired me to think about, I have a bank account, I have a bunch of money in it from my good job. There's probably tens of thousands of Americans working in the aerospace industry that have bank accounts that could be also thinking about how can I support the space industry. So long story short, it started as an epiphany of, we all have financial power of sorts. If we were to put it all together in an institution that would mimic sort of institutions we already have, like banks, for example, could that be a catalyst to support long-term growth of the space industry? So that's how it was born. But I also want to give you some context about banks throughout history, because if you look at the three, or at least the two prior major timelines of extreme economic development, so starting in the 16th and 17th centuries with the New World, and then 19th and 20th with the Western expansion of the US, creation of new banks was key to facilitating those timelines of economic development. So back at the beginning, you had focus on exploration, colonization, and development of the New World and trade routes and mercantile culture. Western expansion, you had steel, oil, railroads, beginnings of electrical grid and telecom, and really JP Morgan was the banking spearhead of that. And now you have JP Morgan, the biggest bank in the US. So the analog here is there a need for a bank in the 21st century to spearhead the development of the space economic sphere? So, Banker Space, what does it look like? And it looks just like any other bank. It's digital, it's commercial, and offers the same types of products. So FDIC insured deposit products, think savings, think checking, think certificate of deposits, both for individuals, whether they're space enthusiasts or space professionals, but also space companies and organizations. There's about $20 billion of short-term cash sitting in bank accounts for major and smaller space companies around the US that could be addressable for this. And also think about treasury, wealth management, and trust services for high net worth individuals and organizations. And all that is essentially capital formation that could be deployed back in the space industry, either through loans, equity, hybrid, community reinvestment, and or grants. And I show this in this little graphic where think about all this capital that we all have in our savings accounts, checking accounts, or corporate accounts, flowing into a bank of space-like institution. So formation of capital, and then deploying that capital strategically into debt, equity, or hybrid instruments supporting space companies, space infrastructure, and space travel. So what is the value proposition? And a bit of an eye chart here, but for the banking customers themselves, whether individual or organizations, there's no change on what you already do. So I have an account Bank of America right now. All this will mean is that I move my checking, my savings accounts to a Bank of Space. So I have the same FDIC insurance, I have competitive APR, or potentially even better than Bank of America and Wells Fargo and those guys. And if I'm a high net worth individual, I can move over my treasury, wealth management, trust services over to this bank as well. And the difference is, it's about offering a personalized or being part of the solution towards what we all know is a problem in the space industry of there's no long-term capital and there's no existing long-term financing structures that take the strategic look of 10, 20, 30, 40 years of what we're trying to accomplish and focus on a step-by-step risk managed capital deployment plan that supports that long-term growth. So what the value prop is, the core value prop is, be part of the solution. from your own bank account at no risk, because FDIC provides coverage on deposits, so there's no risk to your underlying capital. And also, at the end of the day, one of my favorite differentiators and value props is, and some of the products we tried to develop through Finsophy a couple of years ago were tailored towards exactly space travel and space settlement. So think about intergenerational savings or CDs or trust accounts that are earmarked for supporting long-term space travel or potentially even long-term space settlements. And on the flip side, the space industry, those deposits and those accounts, those trusts, are not only providing a quantified and codified market demand for space travel and space settlements, they actually provide financially substantiated demand for those things. So think about, 10 years from now, if you have 100,000 Americans with an average trust account size of $100,000 each, and that's 10 million bucks that would be financially substantiating future demand for space travel and or space settlement. So those are the kind of things that I get excited about, that this type of community-driven institution could accomplish. It's not just about the capital, it's also about the long-term strategy and the ability to start pulling out codified and substantiated demand for the things we care about, like space travel for the masses, like space settlements, and all the infrastructure and industrial capacity needed to support all that. From more financing geek perspective, debt capital is much lower cost than equity capital. So there's definitely a tremendous need for more avenues for debt capital. I know, the Space Corporation Act addresses a lot of that as well. So there's definitely some good ideas out there to enhance or increase the availability of debt financing for the space industry, and that's a good thing. So, what's the market for space, quote unquote, earmarked deposits? And some, 7 out of 10 Americans think space is critical for the US. So there's definitely a national pride perspective behind the space industry in America. So that's something we have going for us. And then from market studies we've done internally, from Finsophy's perspective, we've shown that at least 5% of Americans would align the deposit capital with the advancement of the space industry. So what does that mean in terms of total capital? Well, there's roughly $17 trillion of deposits in the US right now, owned by a mixture of individuals and organizations. So if you apply the market statistics we gathered, that turns out to be just over $800 billion worth of deposit capital in the US that could be earmarked to support the long-term growth of the space industry. So that's a tremendous amount of capital that could be formed, not tomorrow, but in the next 5, 10, 20, 30 years to start being deployed strategically into building this future we're all envisioning. And beyond just the market statistics, as part of Finsophy, we actually did a prototype of this, and we called it Spaceball. So back in 2018, we launched what we called back then the world's first digital savings account for the space professional. And the way we did it, we partnered with a small bank in the Midwest. They provided FDIC insurance and compliance, and we provided the front end and all the account mechanics and the customer acquisition. And we did a prototype with about 50 customers. And here's some pretty interesting statistics. And what you see is that A, there's excitement about this. And then B, if you look at the normalized average account size, we actually were above average in terms of how we compared to the benchmark of average savings accounts in the US. So you can infer that by merit of making this a space-focused / mission-focused banking account, you were able to extract, that's a bad word, you're able to incentivize folks to put more money in their savings to support this overarching mission. And a bunch of words here, and I don't want to read these out loud, but we got some really good testimonials. And what you see is people that had either a space background and were excited to be part of this, or people that didn't have a space background and were just excited to have a differentiated bank account, but also support something good for humanity. And then we wanted to do an unbiased survey as well. So we just picked random people online to get some more data. And again, it wasn't as good in terms of the space professionals, the space enthusiasts open their accounts, but still pretty good in terms of overall affinity towards this concept. and also how much people will be willing to put into a savings account with this bank. And again, the $5,000 per account, that's average savings account size in the US. So what this data shows is that if you go back to these numbers, at scale, the data proves this is possible in terms of overall deposits that could be earmarked for the space industry in the US. So then you think, what do you do with this capital? Because if we had $800 billion of capital right now, what on earth would we invest in for the space economy? And it has to be slow and it has to be risk managed. But there are things that a bank can start investing in today. And I'm calling this space aligned financing. And we broke it down to 4 categories, one being space travel loans, which we analyzed to be just over $1 billion lending market by 2025. Then you have space studies, loans, and refinancing, and that's a really big need in the US. There's a big gap of skill sets needed and capabilities required by the space industrial base. So having a bank focusing on refinancing or providing loans for students going into the field is crucial, both from a strategic perspective, but also an industry health perspective. And then you look at things like space affinity, consumer credit, and also space small business lending. So think about working capital, revolving credit and stuff. So these are all things banks already invest in today, minus space travel loans. But these are things this bank can start investing in starting tomorrow and for the next 5 years. And it's a pretty large addressable market. But where this gets interesting is in the next 20 years, and you look at the reports by Bank of America, Goldman Sachs, UBS, Morgan Stanley, and they all have projections for how much they think the space industry will grow. Well, that growth doesn't come for free. It's going to require a bunch of capital. And we think it's going to require at least $1 trillion of US funding, whether it's through traditional contracting, through NASA or Space Force. A lot of it has to be in things like concepts like the Space Corporation, whether it's loan guarantees or direct debt financing. But also a lot of it has to be private capital. And we think it's going to take at least $250 billion of private capital in the next 20 years to get the economy from where it is today to the $2-3 trillion that folks are projecting in the next 20 years. So there's a giant opportunity for space-focused financing in the next 20 years for a bank or multiple banks to focus on. So this is something we thought about. Why is the time right? Why is the time right for bank of space today? And we have 2 things going, and one is launch costs are coming down, so that enables more business cases to be viable. And then we also have more demand. So tourism is on the uptick, in space manufacturing, LEO commercialization, and government, Space Force, Cislunar aspirations. All these things are catalysts for more infrastructure being needed, and therefore more tangible assets, more securitized revenue streams, therefore a enhanced ability for banks to better price and manage risks when it comes to debt financing. So when we think about a bank today, what could it possibly finance in space? It's not much, right? So if you think about Space Florida, right, they do muni bonds, and they do industrial and commercial real estate, and then you have syndicated loans like the one Bank of America did for SpaceX a few years back. And as I mentioned before, there are some opportunities for space-aligned financing through student loans or consumer credit, etc. But in the next few years, things get more interesting. So as more high-net-worth individuals start going to space, and you open up potential market for lending in space travel and space tourism, that's definitely something banks can start investing in. As more bond-type products or BDCs, which is a concept I pushed last year, these things are additional areas in which banks could diversify and align with space investments. And then long term, U.S. development bonds or loan guarantees or backed bonds and loans, all these things are areas banks would definitely be able to invest toward as well, align themselves with the space economy. So bottom line is, a bank of space will not jump into this from the get-go in terms of deploying all of its capital in the space economy. It would have to be strategic and purposeful and in alignment with availability of assets that provides significant diversification, but also risk management for the bank to be able to do its business, because banks are all about managing risk at the end of the day. This is a bit of an eyesore, so I won't spend too much time here, but we did think about, what are the phases of growth in the space economy, and how does it map to the bank's bottom line? So the line all the way at the bottom, percentage of bank's assets. Key here is you can't commit a bank to invest all of its capital in the space economy right now, because it's just too risky and too foggy at the moment. But it could be 5% of its assets, maybe more. And as the economy grows, and as the risk pricing matures, and as the assets diversify, then you look at the bank's balance sheet and you can talk about 10, 15, 20, 25% of the assets being deployed in the space economy. And so we talk about the financing types, and there's a bunch of detail here that I won't talk about too much, but there is a way to do this strategically, step by step, in the next 20, 30, 40 years. And similarly here, what are some of the systemic benefits from a bank taking this long-term strategic approach, where you carve out an economic development plan that's 30 years long, but you commit to this plan as an institution and focus on, the first phase. What are the goals? And the goals ought to be drastically reduce launch costs, proliferate commercialization in low Earth orbit, and start seeding lunar developments, and then take it the next phase as a function of the bank's growth and its assets being diversified. So we got all nerdy and we did a bank stress model just to prove that, at least mathematically, with sound economic assumptions, whether it's interest rates and growth assumptions for your loans and your diversified assets and growth of the space industry, would this bank have a chance of succeeding? And the answer we got is that yes. I mean, all new banks are not profitable in the first few years. That's by definition how banks get started. They have to struggle a little bit just to get to profitability. But what we proved is that even in the case of a recession, a bank of space have a very, very strong success probability as a function of the interest rates and economic growth and the space industry growth, etc. So what would this look like in terms of structure? And many folks don't realize that starting a bank is not a foreign thing. I mean, new banks start every year. I think in 2019 there were 25 new banks that started, and they start either by applying for a new charter and starting it from scratch, or you get a bunch of ex-bankers that decide they want to go do a bank of whatever, and they go buy an existing bank and repurpose it to go become bank of whatever. So there's actually a pretty cut, dry, repeatable process for how to start a bank. And that's why there's probably more than 4,000 banks in the US right now, mixture of big commercial and community banks. So starting a bank is not a difficult process. And right now, you need probably close to $50 million to get it done. Now, for what we're trying to do, right, if you want to become a relatively sizable bank and start making immediate impact the space industry, you probably need a lot more equity capital. And the rough ratio is the infamous 10x, right? So if a bank has $100 million in equity capital, it can create a balance sheet of, risk managed balance sheet of roughly $1 billion in terms of assets. So the more equity capital this bank would have from the get-go, the better off it is in terms of hitting the ground running with making substantial impact to the space economy with loans and investments. Because like I mentioned before, right, if you have $100 million in equity, $1 billion capacity on your balance sheet, but you're still aiming for a 5-10% exposure, that still only means roughly $100 million of loans you can make in that first year. So bottom line is, you could start it with $50 million, but a lot more would be a lot better. National charter would be by definition what you want to go for, so regulated by the OCC, the Office of the Control of the Currency. As I mentioned before, there's no reason why you want to be all digital, all online, and there's a magic new thing called fintech, which is actually new and which is actually invented by Elon Musk back in 2000 through PayPal, which all it essentially means is everything has been commoditized in terms of technology capability. So, all banks nowadays leverage latest and greatest fintech, which makes them run more smoothly, more securely, and more efficiently. So this new bank would be sort of a top line, online, all digital bank. But at the end of the day, what you want to be the community bank for space. You want this to be a community-driven solution. It's not a Jason solution. It's not a Finsophy solution. This is a community solution. It's private citizens taking charge and saying, we can collectively make a difference here. So let's go build this. So what would it look like in terms of roadmap? And traditionally banks that get started every year, they take about a year and a half to 2 years to go from inception to actually open the doors. And the steps there are raise the capital. If you're buying a bank, begin the bank acquisition process. You got to get permission from Federal Reserve. You got to get FDIC and OCC to approve all that. That could take up to a year. So once you have all those approvals, then you want to go in, restructure the banking pool, or if you have a new charter, settle that up. So it will take about 2 years to go from we've decided to go do this, raise the capital, get the government approvals, and then go open the doors up for banker space. So in this chart, we wanted to model sort of the conservative approach to how you deploy your capital and create assets in the space economy. Because I mentioned you probably don't want to go for more than 5% exposure in year one because regulators wouldn't allow it. Right? Regulators in banks, in the banking industry are very, very involved, and they have a lot of power over you, which is sort of a good thing. You don't want banks to be making too much in terms of risk. And so that's why you have FDIC insurance and you got regulation both at the federal and the state level. But what we're modeling here is that even with a very conservative approach to how you deploy capital in the space economy, you could grow at a very steady rate, very safely, risk manage, and become a top 50 bank in the next 20 years. And just for reference, a top 50 bank in the US means you have about $60 billion in assets. For additional context, right, JP Morgan is about, $3 trillion. B of A and Wells Fargo are roughly at the 2 trillion mark. But top 50 banks are at $60 billion. Top 150 banks are roughly at the $10 billion mark. So, like I mentioned many times before, this is not a solution for today and tomorrow. It's a growing systemic solution that will take time, but once it grows, it will pay so much in dividends in terms of supporting our long-term vision. And this graph just shows that it is doable and doable within the limitations that a bank would have to adhere to in the context of regulation and managing its risks over time. And I wanted to go over this exercise, the FAQ of, why not have an existing big bank do this? Because there's plenty of big banks out there, right? And the answer is kind of simple. Banks don't like taking risks, and why invent a new risk pricing methodology if they don't have to? Because at the end of the day, the space industry is pretty small. Like I said, JP Morgan is a $3 trillion bank. So we think about SPACs being a massive thing, but nah, not for JP Morgan or those guys. And smaller banks just don't want to get involved because the risk is too high. So if they're already making money with existing products and financing methods, they really don't have an incentive to get involved in this capacity just yet. And the last bullet point is going back to the beginning, right? The reason you had JP Morgan, Wells Fargo, and those banks start at those junctures in time, with Western expansion, et cetera, is because there was a need. Those capital institutions back then thought it was too risky, and you had a new institution come up and just go do it. So JP Morgan and Wells Fargo, 100+ years later, are the biggest banks in the US. So similarly, could a bank of space start small but ambitious and become the biggest bank in the US next 100, 150 years? And the answer is yes. So summary, I'll wrap up. Bank of space will be synergistic to everything we're doing. And I also want to say synergistic and mutually supportive to all the other concepts, right? There's no reason why we couldn't have a institution like the Space Corporation or something like, I forget the concept for the Lunar Cooperative and others. All these are mutually inclusive and mutually supportive. So there's no reason why they couldn't coexist. the infrastructure needs right now, and the fact that launch costs are coming down and there's more demand from government commercial, that means it's the right time for banker space to get set up and actively get involved in the space economy. The amount of earmarked deposit potential, I mean, that's nothing to be shy about. $810 million being earmarked for the space economy will be a massive boost to our future aspirations. And I bolded it's a long-term hedge, right? And I mean that very sincerely. It's not a solution to solve the industry's needs tomorrow or the next, couple of years or 5 years. This is really a hedge to say, if we go do this as a community, we know that 20, 30, 40 years from now, we will have an institution that has our backs. And the last point I'll make is, there's definitely need for debt financing, because you look at the economy and the space economy in particular, a lot of it's driven by equity. And my fear, many of our fears are, equity oftentimes leads to bubbles. And, we can't afford a bubble to pop up anytime soon in the space industry. Debt financing is more strategic, is more long-term, and it's definitely what the space industry needs. So my last bullet is, again, this is not a Jason solution. This is not a Finsophy solution. This is a community solution. And I spent probably 4 or 5 years trying to push this as an individual organization. I realized, and the reason I'm doing this presentation is I want folks to potentially embrace this concept and say, look, let's organize together as a community and see if we can do this. And if there's sufficient folks and organizations that want to put their money where their mouth is, we can get this done in the next 2 years. So that's all I had to say. I look forward to questions and discourse with the panel. Thank you for your time.
That's great, Jason. Thank you very much. Excellent presentation. I think everyone was very riveted by that. I think a fantastic presentation and scenario about how we could raise the kind of capital that is needed for all kinds of space infrastructure and future investment in space, leading up to, and I appreciate that, including the eventual financing of settlements. I'm going to now turn this over to the evaluators. First, I want to let all the attendees know that you're welcome to ask questions in the chat field, and we'll monitor those and pick out questions as we go along. We're also doing, as I said, a quantitative questionnaire. This is primarily for the evaluators to complete. However, and all attendees are welcome to complete this as well. We're debating right now whether we're going to incorporate attendee reactions as well. So we're very interested if you wouldn't mind taking the time to fill that out. And so I think I'm going to share that right now. For the evaluators, what I'd like to first do is have the evaluators give their initial, before we get into questioning of Jason, give your initial reactions, the strengths, what would you perceive as the strengths and weaknesses initially, and then we can get into a questioning and just get into the mix of it with Jason directly. So with that, why don't I ask Courtney to kick this off, your reaction.
Well, first of all, kudos to Jason. It is too easy to throw pot shots. I'll have a list of my own questions and some skepticism, but we are to be reminded that it takes a lot for the visionary, for the architect, and obviously the hard work that you invested in this. And I think that it's a very, very compelling concept. We can argue over timing. We can argue over to what extent it's aligned with the need of the industry at this point. But I do think you've fleshed out some very critical points, not the least of which is the debt financing portion. I do believe that bubbles are forming as we speak today. So I may be a little bit more pessimistic than some of us on this panel. So I do think you're right to have us think strategically long term. I am mindful that on average about 7 banks go default every year. So there are challenges. And I'm also mindful that there may be some other models that are worth discussing, but I'll hold off on that, Steve, until my colleagues have a chance to offer their views.
Great, thanks. And Sidney, why don't you go next?
Oh, absolutely. I've known Jason for quite some
Sidney,
time, and
Sidney, just I meant to ask you this before. Can you up the volume? Can you up your volume? It's just a little weak.
okay, let me. Is it better now?
I think
see
so.
If I can change
Mhm.
the settings here. All right. Okay, I've known Jason for quite some time, and one of the things that I admire about him is that how he's passionate about the idea and how his ideas have evolved over time. So Jason, it's definitely the industry and the space sector needs people like you who can push for the boundaries of and not looking for the glass half empty, but the glass half full. Right. Like Courtney said, I have several thoughts to share, maybe ideas, some critical, skeptical, I would say questions, but that doesn't mean that I don't believe what the main focus of the proposal is. Right? I do believe that there's a need for a bank of space, and I do believe that financial mechanisms that focus on our industry needs are definitely necessary. Right? So I'll stop here, but just wanted to say that I'm looking forward to this discussion, and if anything else, for us to contribute in a very productive way, so that we can help Jason to push his ideas forward.
Excellent. And Gary, you're next.
There we go. Yeah, no, I also know Jason for a little while here, and I like this concept. I like how it taps into the larger capital that's available from the banking sector. I like that it leverages sort of existing structures, so there's nothing sort of surprising or new here. But and I also like how it complements some of the other concepts that we've heard about and that are out there. I sort of wonder about the timing of it in the sense of, is it suitable for such early stage development of infrastructure in space, the risk profile of banks, how they have to address the risk factors there, and is it more applicable after things have been established to help the growth of the the infrastructure in space? But I mean, I like in general, I like the concept and how it fits in with the puzzle. So.
Okay, sounds good. Tony, you're next.
All right, Jason, thank you. One of the things I think that is really compelling here is the way it's sort of tapping into sort of public sentiment and the excitement that is generated around space activities. So sort of a crowd banking approach, if you will. Obviously, one of the risks of that is if the excitement goes away, then you have the potential of losing that. And we don't know how the excitement is going to continue to generate or not, depending on how things progress in this area. And when you're leveraging on that for decades, but it's a really interesting, exciting approach. So thank you for that.
Excellent. Thanks, Tony. And Hoyt, your cleanup.
Okay. Well, I don't think my thoughts differ that much from the other evaluators. I think it is a very compelling idea. It does solve a need. I think medium and long term, I think the benefits and alignment and opportunities are wonderful. I think what most of the critique is going to focus on is A, how do you get it started, and B, kind of the first 10 years. And I'll have some ideas, and I'm sure others will have some ideas of maybe how to solve that initiation and incubation kind of period to get it started, because that's going to be the tough part, which I'm sure Jason has already found as he went through Space Vault and everything else. How do you raise that 50 million or 500 million of capital? Why would people give it to you? How do you get the FDIC insurance? If you're 95% like a traditional bank, will you really get the space enthusiasts, in that first year? I mean, there's all these sort of questions we can deal with, but anyway, I do like the idea.
And so Hoyt, why don't you go ahead and start the questioning portion of this, and the rest of the evaluators, please just jump in as you can, and if it, and if I'll call on folks if I feel like they're not getting a chance to join in. But why don't you kick it off with a question?
Well, I guess the first thing I would say, obviously, and Jason's thought a lot about this, if you want to have FDIC insured deposits, which is the normal traditional way to accumulate capital in a bank, you have to have risk adjusted investment. You have to risk-adjusted capital, which means your investments have to be low risk. So I guess there's two strategies. One is that you could say, well, I'm not going to rely on FDIC insured deposits, or maybe not 100% FDIC insured deposits, and find some other mechanism to adjust the interest you're paying your depositors to the higher risk they're taking. So that's kind of one strategy, and maybe Jason can comment on what thoughts he's had about that. But if you are sticking with the FDIC insured deposit route, which is probably the route of least resistance, then I think you need to find a way to be more space-like as a space bank in this first 10-year period. And I look back to our Beyond Earth workshop of a week or so ago with the Space Corporation Act. And I think, Jason, you were listening in on that as well. If something like that did pass and the US government was issuing some sort of loan support through partial or total guarantees, I'm sure they'd rather have banks actually provide the capital and just have the government provide the guarantee, as opposed to the government providing the capital and the guarantee. So if you had partially or fully backed loans from the US Treasury, I think you could go to something much higher than 5% space assets much quicker. So I see kind of a natural synergy between the Space Corporation Act and the Bank of Space. And I wondered if Jason had given thought to either of those two kind of paths.
So you're absolutely right, Hoyt. I've spent a lot of time thinking about that, and maybe in a self-serving way, that's probably why I wanted Auspic to succeed years back. And Tim and I, who's on the call, we've had some passionate discussions as well, because I ultimately want something like that to succeed in one form or the other. But I'm very passionate about it because we need it in terms of the debt financing products to exist. And you're absolutely right. If the government were to provide, it would be depending on the structure of the organization, it's either a direct guarantee or a pseudo guarantee, right? Because Fannie Mae and Freddie Mac make loans that people think are guaranteed by the government, but they're actually not. They're pseudo guaranteed, because if they were to fail, that would be a huge hit to the economy, right? But let's say it's directly guaranteed, then yes, I mean, that asset ratio could increase dramatically to perhaps even close to 50%. That said, to the question of would people want to be part of this if the ratio of the assets is like 5%, it's all about transparency and context. Because if you look at Bank of America and any other bank, what do they invest in the space economy? Less than 0.1% maybe. So as long as the bank is transparent and gives the right context from purely marketing perspective, I think you're still convincing enough to say, look, you can have your savings sit in Bank of America and do nothing for the space economy, or you can have it with us. And even though our assets are only 5% of the space economy, we're doing 1,000x more than any other bank out there. So as long as you're transparent about it, true to what you're doing, and you market it, I think you're okay. Last thing I'll say, if government-backed loans do not exist in the next 10 years, what would this bank double down on? And my bet is financing space travel, financing high-net-worth individuals to go to space, increasing demand for space travel, pushing launch costs down, so it's systemically good. And these loans are actually, I don't know if it's on consumer grade, but they're going to pass the regulatory test, because you're going to give loans to high-net-worth individuals with assets and incomes that back those loans and the risk pricing. So that's what I would double down on if I were, the chief credit officer of this particular bank the next 5 years, if loan guarantees weren't part of the asset mix.
Can I do one quick follow-up there? So that's kind of the depositor side. The other side is raising the capital. And I think part of the problem will be that you may be able to convince the investors putting capital into the bank that you're better than JP Morgan on investing the 5%. Even that may be hard, because JP Morgan and Morgan Stanley and Goldman, they have pretty sophisticated investment units investing in space already. But let's say you convince the investors you're better than those big banks for the 5%. You still got to convince them you're pretty good at the 95%. Otherwise, why would they give you the capital to start a new bank if 95% of it's going to look like a traditional bank? And you got to compete with all the other traditional banks that are bigger and more experienced. So I think that's kind of the birthing process that I see as so hard, convincing the investors to do that if it's really only 5% space, which is your competitive advantage.
I have an answer. I mean, like I said before, right, there's 20 or more banks being created every year that get investors, and it's typically a faith in the bank management team. So my angle was this won't be Jason and his space friends doing this bank. It would be Jason and 19 bankers doing this that have the credentials and experience to run the 95% operation. But the fact that we have a 5% operation that's looking, so far in terms of a strategic future and growth potential, that in itself should get both bank investors and other investors excited. I mean, this is a bank that's going to be successful. I mean, I know Tony said there's a 7%, or I think it was Courtney, 7%. No, so 7 banks fail. Well, 7 out of 4,000. So that's still pretty damn good. So investors in banks, look for management team, predictability, consistency, and risk posture. And that's why banks get invested in every year. You add the fact that this bank is purposed for the space economy and has this tremendous upside in the next 10 years. I think that makes it more competitive than other banks that are being started every year. So I think the birthing is, to give you some credit, because I completely agree, the first 10 years are hard, but the birthing is actually not that hard. It's those first 10 years, what are you actually going to invest in that's going to be hard? And what's the actual ratio? Is it 5%, is it 7%, is it 10%, is it less? That will be hard, but that will have to be figured out, at that particular point in time where you're ready to make those decisions. And like I said, if you have the right team, bankers with the right backing of individuals from the space economy, you can make it work.
Thank you.
Jason, I wonder if I could piggyback on Hoyt's line of inquiry. So we know that when it comes to banks, security, assets, reserves, are all obviously highly regulated, subject to government audit. But if you back up a bit and you look at the legal environment surrounding space, particularly off-planet assets, it's very sketchy for the moment. Ownership of assets on the moon, to name an example, is very much up for grabs at this point in terms of legal definition. So I guess the question I have really gets to securitizing the assets. And I wonder, what's your overall strategy? A bank has, when they approve a loan, they look for some collateral, look for some way to securitize. They have a right to seize the asset with default. And they also have to have a fairly clear sense of when bankruptcy is triggered. So let me just ask on that world of securitization, what your approach is.
I don't think we have 2 hours, do we?
Right. Well, a few appetizers.
Yeah, I'll throw in, I don't think the banker space, at least in the first 10 years, will be spearheading anything to do with property rights and securitizing assets backed by in-space resources. I think that would be too big of a task for this bank to want to undertake or even want to be involved in because of the legal and perception and optics aspects. But thinking about, because I've heard this firsthand from bankers, I don't know how to loan to a company going to want to build space infrastructure unless it's telecom. I don't know what to do. But as the infrastructure and ecosystem evolves, there's definitely a level of expertise that bankers just don't have, but technologists and industrialists like ourselves do have. And if combined with the right minds that have the banking tacit knowledge, I think that would create a pretty intriguing team in terms of being able to figure out, all right, all these banks don't know how to loan out to companies building space infrastructure. Well, let's go solve it ourselves. And that's where I see banking space innovating in terms of securitizing more complex infrastructure that's perhaps interrelated with other things. I was talking to a bunch of OTV companies a few weeks ago, and I was talking about all the secondary and tertiary effects of orbital transfer in terms of, okay, so you need fuel, where you get the fuel. Now you talk about commodities, where those commodities come from. And, Axiom, for example, we're bringing humans to space. So that brings more infrastructure, more commodities. So there's a lot of secondary, tertiary effects there. So banks are not going to think like that, but I think there's enough systemic movement and knowledge now that if you infuse technologists, industrialists with banking thinking, you can start building some of those securitization tools to give you a differentiated advantage compared to other big banks that don't even want to touch it. So long story short, and I've done a lot of thinking and analysis and have my own tools and methods to help with that. But I believe that will be one of the main differentiators of this bank existing in the first place, developing those tools to price the risk and securitize against assets that nobody else knows how to do.
Great.
Thank you.
Well, I see Sidney's raised his hands, so why don't you go ahead, Sidney? And that's not a bad idea for folks. Maybe if you could raise your hand, I'll call on you as we go forward. Go ahead, Sidney.
Good. And hopefully the sound is a little bit better now. Right? So Jason, one of the challenges that we face in our industry is that how to communicate with a non-specialized audience, right? So here you're preaching to the choir, but I think in order to frame, your business proposition in a way that people outside our circles might understand, it would help maybe refine a little bit first the concept, right, for a space bank. And I'm trying to find parallels between what you're proposing and in what we see in other sectors. For example, Silicon Valley Bank, right? I think everybody understands that they've made a big difference in for startups, and the business proposition is very clear. So my first question is, can you find some parallels between the space bank and Bank of Space and something similar to what we see with SVB? And also, I think it would be interesting to see which other passion industries have similar institutions. Like, is there a bank of sports or bank of arts, for example, where you can draw some lessons?
Yeah, that's a good question. So in history, back in the late 1800s, maybe early a little bit, is when building societies and cooperative banks emerged in Europe. Because as Europe was being industrialized and you had a bunch of people being left behind, communities organized and pooled capital through cooperatives and building societies to go address community needs, whether it's building more affordable housing, maintaining employment through building of factories, etc., or more steady, beneficial jobs. You had emergence of agriculture banks focused on agriculture in a variety of regions across Europe. In the US, you had emergence of credit unions, and then community banks, of course, which are, they're commercial banks, but they're built around a specific community, a specific need, and a specific demographic. In modern times, you have banks, mostly in Europe, a couple in the US, focused on environment, green, climate change. You're seeing a lot of fintech companies emerging that are focusing on that, both on the banking and investment side. One of my advisors for the Bank of Space was actually, he's a board member for a bank in Nashville that's focused on music. So they're banking the music industry in Nashville. So there's plenty of examples of it's called a monoline bank, right? It focuses on a specific type of sector of the economy. And the history of that goes all the way back to the 1800s with plenty of success stories. So this is not a new concept. It's probably bigger and bolder, but it's not a new concept per se.
And as just a follow-up question, like you mentioned the credit unions, and the model they're proposing is a for-profit, but credit unions are non-profit. So just wondering, why did you decide for the former?
Because credit unions, unfortunately, have restrictions on what they can invest in. Otherwise, I think credit union would have been a great avenue. But unfortunately, there's restrictions on what they can and can't invest in. And I believed at the time that restriction was too much to handle. And maybe I'm wrong, but that's why we decided for the for-profit route. But that's why Finsophy in itself is a public benefit corporation, because we believe in the public benefit being a direct action and responsibility of such an institution. So yes, it's for profit, but it's also for public benefit.
So if I may, one of the things that we didn't touch on at all were international components. And is this US focused? If somebody wants to get a loan, is there requirements for percentage of ownership of US and things of that nature?
Good question. So, I mean, banks can make loans wherever. It's just a matter of risk management. So it would have to be a case-by-case basis. If an allied country had a company doing something interesting and they came out for a loan, would Bank of Space make a loan to them? I think the answer is if they check out financially, if they check out from legitimacy and credibility, and they're allied nation and owned by allied or US shareholders, then why not? I thought the question you can ask is, why couldn't there be a Bank of Space in Europe or a Bank of Space in Asia? And the answer is there could be. Could be a network, could be the same bank holding company. But our belief is the US is where it needs to start, because here's where we're still the leaders in the economy and we want to stay the leaders of the space economy in perpetuity. So it is a matter of national pride too. So I'm advocating for a Bank of Space in the US first. If and when it makes sense to go international, you do so, but do so with very, very large degrees of awareness of how it impacts your national security and your national pride aspects.
Great. Gary, did you want to jump in?
Yeah, I guess I know all the comments make sense to me so far. My only thing is really where, how can this help to enable the motion of the space sector moving forward in the near term? It seems like the risk factors are pretty substantial in the beginning, and I guess keeping it at a 5% allocation sort of helps to mitigate that. But you mentioned, Jason, that like addressing development of space resources or space infrastructure might be a bit of a reach in the near term. So just around the enablement of things, or is it more of a long-term play?
I'll be frank. I mean it literally as a hedge, and I've experienced a lot of this myself. The fighting of, man, I want to go to space. I want to make this happen tomorrow. But at the same time, we could keep saying that, and then 20 years from now, we're still in the same place because we didn't put the right structures in place 20 years ago. So what I convince myself, and what I continue to convince myself every time I have the same, esoteric dilemma, I say, look, we got to make some hedges here because things could pan out great. Congress may approve Space Acts from Tim or some version of it that, that Congress wants the next few years. And then you have a flow of loan guarantees and loans and stuff. And you have banks up the yazoo now pouring capital, and Bank of Space, very easy sell to investors, and everything works out great. Or in 6 months from now, SPACs start blowing up and capital markets completely dry up in the space economy. And I mean, SpaceX will keep doing what it's doing, but you won't have reduction in launch costs. You won't have major infrastructure plays being successful. You have a bunch of issues, and things they'll chug along, but they won't be what we think they should be or what we hope they would be in the next 10 years. So my philosophy is, got to make a hedge here. And if it's 20, 30, 40 years, okay, that's fine. We're not doing this for ourselves. We're not doing it for our kids. We're doing it for the future of mankind. So let's make at least one hedge. And I think this hedge ought to be something like this, because if we can't convince ourselves, the community, that this is a good idea, and let's put our money behind it, then I don't know what we're doing, because government's really hard to convince right now. So I hope something like the Space Act takes off, but I'm very skeptical of the government having the right frame of mind to do it. So I think the industry and humanity needs at least one hedge, and this is it.
Yeah, I'm going to step in here myself, Jason. I really like that sentiment that there doesn't have to be just one answer, one solution to this financing challenge. That it can be on multiple tracks. So we can have a Bank of Space, and we can have potentially a space corporation and some other things. The question I have in listening to you, especially listening to your presentation, is I understand that as the bank gets going, you have this you have to manage risk, and I totally get that. And initially, you've got to sort of the 5% that you're going to allocate or invest in space ventures and so forth. It makes sense. But I mean, how, as you go down the road, and I'm much more interested, I'm very interested in the 10, 20, 30-year horizon. You know, can you put in guarantees, I guess, that would say that 20 years from now, the managers of the bank would be willing to take additional risks, the kind of risks like significant infrastructure investments, you know, mining operations, those kinds of things. You know, I would be concerned that, you know, that bankers will be bankers, you know, and that, you know, will they be willing to open the lending and making available this capital for these larger infrastructure elements, especially as you look ahead to space settlement and so forth. Do you really, you know, that would be one concern I had. I mean, how would you address that?
So yeah, we thought about that too, and we actually started building a pledge, a banker's pledge, as part of the Bank of Space charter, essentially saying what you eloquently put out, that as time goes by and the industry matures and the bank grows, the bank is going to be always looking out for making the best possible outcome for the space economy and increasing its capital flow as it makes sense financially. Putting a timeline to it, I think, can be notional, but it has to be in alignment with where the industry is. Because if in 20 years from now we're still the same place, it's going to be tough, right? But that's how we thought about addressing those optics, adding a pledge that all the bankers that join the team sign. It's part of the bank's charter, and people can see it. It's on the website. It's part of everything we do or what the bank does. So yeah, that's how we're planning on addressing that particular problem, making it more legally. But I don't know how you make it more legally binding, because that will get very, very tricky and will make regulators very nervous. But just having a transparent pledge, especially in today's age where you can market that and have it as part of the core platform and value prop, I think ought to be pretty powerful.
So then from what I'm hearing, what you just said, the bank would track along the progression of our activities in space and be a mechanisms for financing, but and supporting that activity, but but not necessarily a driver of that activity. You know, right? It would be a supporter of that of advanced activity, but not necessarily a driver or
strategic driver. I will, like I said, I double, triple, quadruple down on this bank could be a driver in terms of increased demand for humans going to space. Because humans, if you think about the value chain of the space economy, beyond US government Space Force, actually humans are the most inelastic demand for space right now. You got these ultra wealthy people and millions of people. If space travel was 100K right now, I'd go, you know. There's millions of us that would go if the price is right. And like I said, a bank can make loans to individuals if they have the right credit ratings, you know, and have the assets and income to justify it, said loan over 5, 10, 20 years or whatever. And that itself increases demand, which in itself reduces launch costs, which in itself brings about more activity. So from that perspective, I think the bank or a set of banks could be huge drivers for growth. And I will always say, and I'll live and die by saying, that we need more humans in space, because that's how you drive an economy in space. So I think a bank can make a huge difference there.
Steve, Jason, I would ask, please, that when the bank is formed, if you could resolve one of the more annoying practices that banks have, that when we make a transfer from one bank to another and they hold it and they charge interest, which drives me nuts in the digital age. If you could take care of that, you've got my deposit commitment starting today. Let me ask you, in the research you've done, and I really love your reference to hedging, I love your long-term horizon. Did you look at the Federal Land Bank model, which, as you know, are basically cooperatives owned by customers and money, particularly since the meltdown of the 80s, when almost $3 billion of defaults were plaguing the rural community. They're now float bonds to basically, in terms of getting their capital. Just curious whether you looked at the land bank model as as a possible analog?
Not. That's my homework the next few nights
Oh, okay.
when I have free time.
When you have free, in your copious free time.
Yes,
Thank you.
but interesting idea. I'll have to check it out.
As you look at, what you've done and what have you, what worries you about this? Like, what is the biggest risk that you see in this being successful? And I know you're trying to hedge all of those risks and adapt, as has been mentioned, but
I think getting it started.
Okay.
I mean, it's an easy process, but I haven't been blessed with a network of wealthy friends, unfortunately. And, I haven't created a PayPal or an Amazon either. So just getting access to that capital to get things going is my biggest risk. If somebody came to me with $50 million, I would go make this happen tomorrow. And 2 years from now, open the doors and start making a change in the space industry. But that's been my biggest issue, is just raising the capital, because I just don't have the network or I'm just being transparent here. I don't have the network or the wealthy friends to support this. And
okay.
Just a quick comment. I was an early subscriber to Space Vault, so I would love to hear about some of the lessons that you've learned through that experience. But more specifically related to the current proposal, right? I think you've mentioned the challenges of dealing with governments, and I was wondering if you have given some thought on the role of state governments, which are showing increasing interest in space activities and might be more receptive to the idea.
there's no reason why a state government can't be a shareholder in such a bank. And additionally, there's no reason why there couldn't be a loose partnership between the bank and multiple states, in terms of state comes in with a bunch of small companies that it thinks are worthy of financing. The bank can partner in providing financing, or it could be some sort of bond structure that the bank could buy, that the state underwrites. So there's all sorts of things you could do with the state for sure, including shareholders, deal flow, co-investing, et cetera, et cetera. But I'd be very, very hesitant to make a bank of space focused in Texas, County stuff, or whatever, for whatever the state. It has to be a national solution for scale and for risk management, and I think for regulatory compliance perspective as well.
Go ahead, Hoyt.
Yeah, I think the answer to this question may be no, but I'll ask it anyway. In addition to sort of dollar-denominated accounts, to again make it more international potentially, have you considered cryptocurrency accounts, and would that make sense?
I mean, things are getting more, I guess, acceptable from a regulatory perspective, but not so much so where I think it makes sense yet to have crypto accounts. I mean, banks are definitely looking at it, but at the same time, I don't know what that would do for the bank, other than it may increase the addressable market for deposits. Because at the end of the day, if I'm bringing a bunch of Bitcoin in those accounts, given their volatility, it'd be an interesting problem and opportunity at the same time. So I don't know if it changes things too much, other than increasing potentially the market for the capital you have available to play with. Unless you're thinking about something different.
No, I think that you certainly get additional capital to play with. I think it's the other end that's the problem. How can you invest it or loan it, and can people use it? But I think some launch service company just said they were going to allow people to buy launch services with Bitcoin or Dogecoin or something. So maybe it'll change over time.
And that's fine, right? Because you just get the Bitcoin at the daily market rate, and you just cash it out immediately into US dollars, right? So I don't think these companies are holding Bitcoin; they're just using it as a transaction means.
Right.
So
you want to reduce your risk to Elon Musk tweeting. So
yeah,
all the crypto.
Yeah, would I use crypto as a reserve currency? No, that's for sure.
Well, we do have one actually related question here from, looks like from Blair. Blair DeWitt said, what would be the currency of in-space look like? Is it blockchain based? How would the Bank of Space help off-world arbitrage markets?
All I'm going to say is life support units. So I did a paper a few years ago for the Space Resources Roundtable with a few colleagues, and essentially we said the most valuable asset in the universe is elements and energy that support human life. So I think in 100 years, the currency of choice would be backed by assets, energy, and infrastructure that support human life.
Cool. Well, we are approaching the hour and a half mark. What I would like to do is, as we usually do, is give our evaluators an opportunity to make final thoughts and recommendations to Jason as to how he might improve his idea. So with that, and certainly, Jason, you'll have an opportunity to share any final thoughts that you have. But why don't we start with Courtney?
Jason, kudos to you and your team. I agree with Sidney and everybody here that it's a very compelling model. It's one worth Steve are pursuing. I'll send you a couple of links to the Federal Land Bank, Jason, to assist your looking into that as a possible analog. I'm with Gary in terms of timing, staging, but I'm back to your point about hedging, and I'm back to your point about we need now, not tomorrow, not 5 years, 10 years from now, to begin to think of financing mechanisms that can see us through what are going to be very serious challenges ahead of us, financial, technical, and otherwise. So I look forward to working with you, Jason, and my colleagues here to see how we can flesh it out and begin to get some traction for it. So thank you.
Appreciate it.
Hoyt?
Same, Jason. Be glad to continue to sort of be helpful as I can. I do think you have a great idea here. It's, getting that first 50 million is a huge hurdle. Once you have it, I think there is a path here to success. I still worry about starting off with 20 traditional bankers and doing 5% on the side, and then having to transition that away to 95% space investments and non-traditional bankers. I think that transitions is something that has to be thought about. And I like Sidney's comment about there's a way to make this look more like a Silicon Valley bank early on, where you just have all this expertise of making good risk-adjusted investments. But I think you got the kernel of a great idea here, and maybe there's just a tweak or two away from a huge opportunity. So I'd love to keep talking.
Thank you, Hoyt.
Mm-hmm. Sidney?
Yeah, like I second on Courtney's and Hoyt's ideas and perspectives. So my comments are going to be mostly on the execution side. And my suggestion is that I structure your presentation more like a startup pitch. Right? So you have to refine. I know that probably the scope of this discussion is different, and hopefully you also have a different deck for potential investors. But showing a roadmap with a better description of the early stages of how you would be deploying your initial capital request. Create a story that makes it more tangible for potential investors. I think would help us all, not only people in the space community, but also everyone who might be interested in supporting the idea. And finally, adding some of the things that if you already know and you already mentioned, like the Bank of Music. I think that is a great example of how to make it more the story more concrete for people who don't understand pretty well how things work in this industry.
Great. Tony?
So I'd agree with almost all the comments I've heard today. And like tapping into what was just mentioned is I like the long-term thinking here. I really do. But don't be afraid to be a little bit bold. And 5% may be too small. One of the other pieces here is marketing is going to be a big thing, since so much of your capital is tied up into individual excitement. And I didn't see or hear anything about that. And I know when you're doing your first 50 million, maybe we're not that focused on it, but going forward, you're definitely going to need to be. So.
And Gary?
Yeah, no, I just wanted to share a little my personal perspective. I also had a Space Vault account in the previous version of this idea, and it occurred to me that I don't think the threshold is very big to get people to sign up for something like this. I mean, I have no love for Wells Fargo, where we have all of our family's money, and if Jason could give me a bank account that had the same exact features as the Wells Fargo bank account that I have, but it also helped to advance space. I mean, obviously, I'm a have a lot of interest in space being advanced, but even people who have much less interest might be perfectly willing to do that. The transfer of money is not so difficult anymore, and with the way we can do internet banking, a lot of these ideas are much easier. It seems easier to deploy for people to work with in their lives and everything. So, I think the threshold to get like a lot of that public enthusiasm, and there's a growing enthusiasm for space in the general public, I think, as we see, on a daily basis. Yeah, it seems totally plausible to build that retail capital base on the back of just a marginal change in what you're getting for your bank account. So I don't think it takes a lot. I also really like, the complementary aspect. I think if we can get, I feel like this really gets supercharged if we get something like this, something from Congress that helps to guarantee loans, and then you have banks diving into it. Then it really gets moving forward. So anyway, I'm a supporter. I mean, I'm happy to help us as any way I
can. Thank you, Gary, and thank you all the evaluators. What I want to, if we can extend this just for a couple more minutes, I wouldn't mind. I would like to open this up to the attendees, and if anyone would like to raise their hand and ask a question or make a comment, I'm happy to take a few minutes for that, and I'm sure that would be valuable, and to give folks a chance to think about that. In the meantime, I just want to acknowledge some of the Beyond Earth Institute team members that are going to be working on pulling together all the material and information from these workshops and this research effort. We really couldn't do it without them, including Tyler Bender, who's on the call here, Jonathan Thorvaldson, who's with us, Lindsey Rogers, and Cy Sankirth. They're going to do a fair amount of the heavy lifting and putting together a synopsis of these workshops and helping us do the research for a final paper on that nature, final paper for this. So with that, and I don't see any, I don't see anyone raising their hand, so that's perfectly fine. So Jason, why don't I give you a chance to make any final comments or thoughts that you might have, and we'll sign off.
I just want to say thank you very much for including me to this, and I appreciate all your guys' time and valuable feedback. And I'll say this a third time, right? This is not a Jason or a Finsophy solution. This is a community solution. So I look forward to working with all of you at whatever capacity you think you have valuable to make this a reality. And I know it's not a solution we'll just do tomorrow, but it's going to take some time. It's going to take some collective effort. But I've put 5 years of my life in this. I'm going to put some more. So appreciate it.
Excellent. Well, thank you again, Jason. And I think one of the biggest takeaways that I have is that, there isn't, there may be several methods that we will use to finance our future in space, and a bank of space could certainly be one element of that, and a very significant element of that, in conjunction with other activities. So. I think that's certainly one way to look at all of this. So again, thank you, Jason. I think as this is for now, this is our last workshop. I want to thank again all of the evaluators, and I believe the other presenters from the previous 2 weeks, Michael Castle Miller and Tim and Tim Chrisman had joined us as well. So they're obviously very interested in what's doing. Thank them for their efforts. And we'll probably be in touch with the presenters over the coming weeks and months as we prepare this. We will share the reports with you in draft form before we do finally publish it. So be on the lookout for that. Thank you all. If you have any questions or thoughts about Beyond Earth, of course, you can contact me directly steve@beyondearth.org. Certainly you can contact us through our website. And with that, I thank you all. It's been a great session, and have a great rest of your week.